As a fundamental and statistical trader, my highest probability trading strategy is the reverse split setup. In this video, you will see the step-by-step walkthrough of the winning trades using this strategy, as well as the losing trade when I made a critical mistake. Some of you guys found out who I am through these articles or podcasts like these. Yes, my career win rate as a trader is over 90%, but I would much rather say I'm a trader who knows how to be selective, and I strive for the high probability trades. We will go over what a reverse split stock setup is, and I will explain the edge in this setup and how I look for my entries. Then I have the winning trades to walk over with you, assuming that some of you are more willing to learn when you see the big profits. I do have one totaling over $75,000 in profits in one stock, and other great execution examples that will help you learn better. Finally, I must go over a big loss using this strategy, losing $11,000 in one stock. Trust me, learning from my mistakes is much more helpful than focusing on how much money I made. If you're ready for this trading strategy tutorial, give me a free like on this video and get your notebooks ready. What is a reverse split setup? A reverse split setup is one of my highest probability setups. Whether you are a long or short bias trader, understanding a reverse split will help you improve your stock selection. A reverse split happens when a company artificially increases its share price by reducing the number of outstanding shares. In simple terms, a company performs a reverse stock split to make its stock price look higher price on the surface. Fundamentally, nothing changes. 9 out of 10 times, the company is still trash if it needed to perform a reverse split. Here's a quick example to help you understand the math. Stock ABC is currently trading at 90 cents per share, which is below the NASDAQ compliance requirement of at least $1 per share. As such, they decided to perform a reverse stock split of 10-to-1. Stock ABC will have its shares outstanding reduced by 10 times, and their stock price will now become $9 per share. By now, some of you may have noticed, since we know that the company is trash, can we always bet on the stock price going down and make a profit short selling the stock? The answer is not always. You want to be selective. Yes, a reverse stock split creates an edge for short sellers because it tells us that the fundamentals of the company is financially weak, so it is not going to attract real investors who can generate sustainable demand for the stock. When there's a lack of demand, price is likely to go down over time. However, pay attention now. If every short seller knows that a reverse stock split is a great setup, the stock doesn't just go down immediately. Instead, a short squeeze is very likely taking place because short sellers are competing against each other. On top of that, what really moves the stock price is often institutional funds, big money, and insiders. Knowing that the short sellers are targeting a reverse split setup, the big players and insider owners can easily do the opposite to pump a stock, causing the short sellers to get squeezed big time. This is a real scenario that happens more and more frequently among the small cap stocks. With that said, it all goes back to being selective. What exactly do I look for, and how do I stay selective? I look for two key criteria. Dilution. I look into the financial background of a company by diving deep into their SEC filings and dilution history. That means I dig into the offerings, warrants, insider selling, and most importantly, keeping track of the changes in stock float. Sounds astronomical to you? Don't worry, I will give you a step-by-step tutorial. With the research tools that we have today, this process has become much more simplified. Timing. After studying over thousands of stocks and annotating the charts with data, I have my own understanding of the ideal entry timing to trade the reverse split setup. Your entry timing is very crucial to your success in trading. The dilution history of MULN. The first stock that I want to walk you through is MULN, Mullen Automotive. This is the perfect example of a dilutive stock. Being dilutive basically means that a company keeps planning another offering, warrants, or any other insider selling schemes that increase the share float. Many small cap stocks use dilution to raise cash, and in order to keep diluting, the company has to pump its stock first. This is why you often see small cap stocks with charts that show many extreme spikes. The stock went up quickly and dumped quickly as well. So here's the daily chart of MULN. Remember that a key metric to track a dilutive stock is the float. Okay, so this is the MULN chart. This is the 2-year chart. So over here you can see I've annotated over time, and this is what I do to keep track of the float. There's really nothing out there that keeps track of historical float. As you can see, you see all these reverse split bubbles, these purple marks, and I'm using Thinkorswim. It shows the reverse split bubbles. And each time the stock has done a reverse split, and you can see one for 25, one for 9. So you can see I track the float. So after the split, in this case, it was 4 million. Then over time, they diluted it, and now it's 11 million. Then a little bit more time, it's 24 million. And then they do a reverse split, it's 1.6. Then over here, 8.8. Let's go to the closer to 1 year, 8.8 million with a bunch of dilution. And now to this date, right now it is February 5th, 2025. It is now 61 million. And pretty soon they'll do another reverse split. They'll do the whole thing all over again. So check it out. Yeah, so just small float, yeah, dilute, and then reverse split, small float, dilute, and then rinse, repeat. So that's what this stock does. In my annotations, I just make it a habit. If you see my charts over watching a lot of videos of mine, I just make it a habit. I always go through the same motions all the time. Just like a professional athlete like Tom Brady goes through the plays all the time, just rehearse their plays over and over in practice, and then it becomes just second nature. So as I'm trading in the intraday, it's just automatic. I just go through my process. Float, cash need, warrants, form of dilution, and I like to know little things here and there, like for example, reg show. And of course, in a stock like this, that's known to be like a reverse split kind of, situation all the time, it's always relevant. I like to put the reverse split date to see how far are we along from that reverse split date. Like for example, this was back in November. That's just 2 months from the reverse split. So 2 months, if you go, they have like it has a pop, and it becomes a short. They use that short in price to dilute as an opportunity. And in this case, they had warrants, I believe, at like $3. Yeah, 6.9 million. Oh, they're unregistered though. And eventually they did dilute them. As you can see, it's 61 million floating out, and they still have no cash. They always have a problem with cash, and they always need to raise money. And that's why the stock is listed on the market, to raise money. Okay, so this is Mullen's profile and Ask Edgar. As we can see here, the current float is actually 47 million updated on Ask Edgar. So yeah, I like to use multiple sources to check the float. Ask Edgar is pretty accurate. It's they uses AI to figure out the float through the filing. So it calculates the float through using AI through all scraping all the filings. Anyways, as you can see here, these little bubbles, these little stars right here are to summarize the filings, which are very, very, very helpful. And over here you can see the dilution, the current dilution, and whether it's the color codes, whether it's in the money, potentially in play or out of play. So green, yellow, red. Red is like it's not in play. Green is like okay, it's ready to go, and yellow is like it's within range, but it's not like there yet. But green is like it's in range and it's ready to go. So very, very helpful to have it color coded, because we traders we need to think very quickly and be efficient. So yeah, and precise. So that helps. All the listings of all the warrants and the remaining. So you can see these have been used up, they're just not there anymore. And you can see they have a ton that are not registered. So these are just not registered yet, but they have a ton ready to go, locked in and loaded, but they're not exactly registered. So we're waiting on those. With dilution, you just gotta wait. Like, for example, these reverse splits, they start out with a very low float. Then you just gotta wait and be patient until they dilute, and then it becomes an easier short. So that's the case over here as well. So it's already a big float, 47 million. That float is gonna increase exponentially when they start to unload these. And you can see it's a very cheap price too, 43 cents. From the history of MULN, once they start unloading all this dilution, they're gonna probably have to do a reverse split in the near future after all this is like unloaded. So that was a very crucial part of my trading process, the due diligence. I must have a thesis based on the dilution history and other key fundamental information about a company before trading a stock. This is how I stay selective and avoid lower probability setups. You can also use this AI research tool, Ask Edgar, and get some discount with my link in the description of this video. This tool is like ChatGPT or DeepSeek for small cap stock traders. With the help of AI, you can easily find the keywords in the SEC filings and look for important dilution data. Next, let's take a look at how I traded this stock in the past, how I timed my entries after having a short selling thesis. I made about $20,000 in total on this stock, but what you should know is that I waited for the stock to dilute first before shorting it. Alright, so diluted stocks tend to squeeze first after the reverse splits because their floats are just too low. So float is supply. If supply is too low and a small amount of demand, volume starts pushing it up, or just a small amount, it can squeeze exponentially. And especially when more short sellers get attracted to it, because they get, they get sidetracked by thinking, oh, this is a bad company. This is they look at the chart, like the 5-year chart, the 2-year chart, 3-year chart, and this is all down. And it's just down so much that sometimes the squeezes are like little blips, but they're actually pretty decent squeezes. So you got to respect it. So that's their whole game plan. While the float is tiny, they manipulate the stock in a way through news or through whatever means to get more short sellers attracted to it, to get a squeeze going so they can raise money into that squeeze. So like they can do an offering or start to dilute their stock while the price is high from the squeeze. So that's the whole game plan. So with me, I time my entries based on the float. So I go for these stocks, ideally 2 million float or more, and I use the dilution, whether it's registered or unregistered, as my target entries. Somewhat, let's say 30%, 50% or higher above the warrant entry, the warrant prices. So about 15 to 30%, sometimes 50% above the warrant prices, whether they're registered or unregistered. That's what I'll look for, because these stocks usually they have a heavy float. They have a lot of selling pressure. I have a lot of experience trading them. It's not like trying to ride a sector hype. Like there's not any crazy sector momentum that it's attached to. Then that's how I'll time my entries. And of course I'll use anchored VWAP, the top deviation, regular VWAP, just the way I trade around those, which I'll explain in future videos much more in depth. Okay, so with MULN, the way I'll time my entry is, so for example, here we had the reverse split in September 2024. That's right here, right? We got it. Now, if you look back over here, it was just falling nonstop until November. Then when November, we had the day, we had the opportunity. It had a 100% squeeze. So by a combination of things I'll use for my entry, which is 100% minimum criteria, and also it helps, so it had those $3 unregistered warrants, and with a stock like MULN where combination of a nice entry. So over $3, around 100% up, you can trade it that day. So in November, when it had that big run up, 100% up, I like to use, the parabolics above volume weighted average price, VWAP, for entries. Don't trade the last hour of the day. So this squeeze over here, I wasn't part of that squeeze, but using the warrants, unregistered warrants as a minimum entry criteria, and also looking for over 100% up on the day, that helps to mitigate that risk. However, that is the first green day. I don't really like to trade those, but on a stock like MULN, I might trade it for an exponential parabolic move like we had on these 2 5-minute candles over here. Now, the big conviction trade is the bounce. So MULN was flopping around for a few days, and then it had a bounce. So yeah, with MULN, I like to trade it on the bounces. So I'll be shorting the bounces. As it bounces, I'll be, in and out of the trade, swinging some of it as long as the borrow fee rate stays intact and stays nice and decent enough to swing it. It's towards after a few days after the initial run up, it's a high chance that it will just fade off as it dilutes. So, and that's exactly what happened. You can see over here, it just continues to dilute, and any significant bounce is a short. And that's the way I play these things. And you can see even before the reverse split, it had a bounce, and like those bounces are really good shorts. It's just the first green day, you have to be careful because they can go up significantly on that first green day. And MULN is a stock. It's a electric vehicle automotive, and it's like run by this sketchy CEO, and the whole thing is sketch, and they will never like produce a product in mass at all. So, but it is tied to electric vehicles, and electric vehicles is tied to Tesla. And so anytime, it'll try to ride the coattails of something in a larger sector. So you have to be careful with that. And a stock like this, they might just come up with a PR saying like, hey, we're doing some AI right now, or I don't know, quantum computing or something. They're going to try to do something, or Bitcoin, whatever is hot. They might try to do something with it. And, it's like, as far as a headline, and that can cause a first green day, and you got to respect those first green days. They can run up. If that float is low, they can go super, like way overextended and, you know, squeeze everybody out before the subsequent, you know, drop and fade off. So you want to be able to capture, you know, these kind of moves and avoid this big initial squeeze, you know, because a lot of short sellers, they salivate. They know, I mean, the cat's out the bag. The stock is very bad. This company is very bad. The CEO was on like multiple big news networks, and like he just hangs up on the call whenever they ask a hard question. So it's like the cat's out the bag, you know. It's like everybody knows the stock is bad. So like when it did the reverse split and it was just fading off into oblivion, you know, there's a lot of short sellers that want to see that big first green day so they can short it. And you know, in this case, a lot of time passed before that first green day. So that first green day, like, it went exponential because a lot of short sellers just attacked it too hard, you know, and then just short squeeze. And then it fades. So you want to be able to capture the fade, you know, like the easy part. This is the easy money. This is the hard one. So just you got to keep that in mind. These stocks can squeeze a lot more, especially if a lot of time has passed without a squeeze. So that when that squeeze comes, it's going to be pretty big. And MULN, you know, it's always on my radar. I'm looking to always trade it like whenever it has those big moves, you know, the second or third day after the big move, because I know this stock has a lot of gravity, you know, it has a lot of downward pressure because of dilution and always needs cash, as you know, and it's like, you just got to give these things time to dilute, you know, they dilute a little bit and makes it tradable. Well, if it's a nano float, and sometimes these things can be a nano float, then it's not going to be tradable, and it's like it can squeeze more than, you know, behavior the way it should behave, which is the way bad companies should behave. It's go all the way down, you know. But if that float is low, that's just the way the rule of supply and demand works. So you got to respect it. Another good example that would help you grasp the concepts of reverse split setups is FFIE. If you have been following me for a while, you may know that this stock is my biggest winning trade, totaling over $75,000 in profits. Again, I recommend that you focus on the process of how I analyze this setup and how I traded it. All right, guys, so this is the 1 year chart of FFIE. And last year, around late May, around the time when actually that was the time that I had my biggest win up to date, the $75,000 trade, or series of trades during the area, which I covered in a previous video. It started at around 11 cents, I believe. They've done reverse split, so now this is reverse split adjusted. It shows 156, but I don't know, a range of like $2 to $4. I forgot. I'm unclear with that right now because of the reverse splits. The reverse splits are meant to confuse you, you know, so the charts get reset, and you know, it's like a brand new chart, you know, so every time they do a reverse split. But anyways, the 1 year chart, it shows me that, you know, they play games with the float. So right here, it was a 42 million float, and then it became a 439 million float. So like this volume here, I mean, it's reverse split adjusted, but at the time it was an incredible amount of volume. This traded billions in the B's, guys, billions with the B, billions of shares. And it was a 42 million float, but 11 cent stock. So it's like the dollar volume. It doesn't take that much money to buy up the float. But because, you know, so don't let that big float of 42 million confuse you, because the market cap was still very low of this company, and it could be bought up. The float could be taken, hijacked with not that much money. It wouldn't take that much to hijack the float. And also, as you can see, I marked it here. It was a very high short interest at the time, so it was a target to short squeeze. So somebody could have had the agenda, and we know this is Chinese related. I covered that in the last video in depth. It's highly possible it was a manufactured run up with billions with the B volume. Don't let this fool you, this low reverse split adjusted volume, that it was manufactured to sell that paper, you know. And as you can see in hindsight, that's what they did, because the float increased to, at this time, 439 million. This is an extreme example, so that's something to be aware of. Like when the short interest is that high, it can be a target. And if it has Chinese ties, very big red flag. So it's you want to be very careful with these. But you know, and since this stock is Chinese related and it was high short interest, and my minimum criteria to enter the stock a dollar, or sometimes in this case, I wasn't even looking to short it, and I was traveling. So I had a delayed entry into this. I was like, okay, like it was absolutely screaming at me at that point, and I felt comfortable shorting it because after a stock trades 3 to 4 days of billions of shares, and it's that extended, this chart tells me that they are just actively running that game plan of low float and dilute the stock and do the reverse split to get NASDAQ compliant. By the way, they got NASDAQ compliant with this without a reverse split. From 11 cents, it stood over $1 for a couple of weeks, I think. And they didn't need to do a reverse split, but they need to get compliant with a lot of other ways. And you know, you can use Ask Edgar. You can type to Ask Edgar, like, you know, what they need to do. You can start asking questions back and forth of like what they need to do to get compliant. So that it's a very useful tool. Instead of, you know, doing it all manually, you can speed up the process of understanding that information to see what their agenda is gonna be, what it could be, you know. So then you can plan your trade around that, because you don't want to enter this thing too early. A lot of, you know, this could squeeze. I mean, they did squeeze a lot of shorts, and you know, it was very, very violent push. Anyway, comment FFIE if you want to see my very detailed trade recap where I uncovered all the scammy initiatives behind the stock to develop my trade thesis and every detail about my entry, exit, and risk management for FFIE. I will reply to your comment with a link to the video. FFIE is a very memorable reverse stock split that many other traders have also hit big on this setup. Make sure to leave a comment if you want to get a link to the full trade breakdown. Now let's look at a losing trade example. I'm much more excited to share what I did wrong here than going over the wins. I don't encourage people to pay attention to the P&Ls, no matter if it's a win or a loss. But if I was learning trading, I would like to study the mistakes that others made to reverse engineer and implement rules to help me avoid them. I lost about $11,000 in FLGC reverse stock split setup. Before we review the trade together, I want to give a shout out to my personal trading broker, Cobra Trading. You see, using the same broker as me doesn't mean that you will become a successful trader, but the right tool will get you access to faster order executions, help you save on commissions, and most importantly, giving you access to hard-to-borrow stocks at affordable borrow fees. With Cobra, I'm able to locate shares fast when I see my high-probability short-selling setups. They have an extensive short inventory and a special limit order route, REB25. All of my limit orders placed to REB25 will help get me rebates, which help cancel out commissions, so that I can minimize my cost of trading and focus on executing my trading plan without other unnecessary concerns. If you use my special sign-up link, you will get access to Cobra Prime, which comes with all my other essential trading tools, including Dilution Tracker, Ask Edgar, Trade Idea Scanner, and more. Cobra Trading is a SIPC insured broker. Don't miss out on an excellent trading tool. Start taking better trades today. Okay, so with FLGC in 2023, they did a reverse stock split, and the stock, this is the stock that I went to Colombia and exposed, and like I was super bearish on it. I believe it was around 2 million float, and I was really bearish. You know, 2 million float checks out, but you got to respect that it's a recent reverse split. So this is June 2023, and 2 months later, it squeezes big. And I'm short this day, the first green day. And yeah, this hit my stop loss. And the reason why it was $11,000 loss is because I had an $11,000 stop, broker stop. And the reason why I had a broker stop, it was remember back in April 2023, if you see my other video with the $150,000 loss on TOP, I put in a broker stop after that. So that was, this was one of the first times, I don't know, one of the first few times I got stopped out after a broker stop loss. And I had that number at 11,000 at the time. And yeah. And then, yeah, so that's how I got stopped by a reverse stock split. And you can see it just dumped right after that. So it's like short sellers got squeezed and then it just dumped because I had no reason to be up. The stock is a scam. And yeah, that's me getting squeezed out and hitting my broker stop. So what lessons did I learn from this loss? that first green day after a recent reverse split, let it go, you know, because like even if I get a sloppy entry here, my thesis is correct. Everything, you know, this stock is a scam, and if the float checks out, 2 million float, everything, it's just too overcrowded. So let it squeeze that first green day and then get it on the blow off top. You know, don't be such in a rush to short it like right away. But yeah, I respected my stop, and yeah, I did what I needed to do, you know, respect the stop. And yeah, after that, oh well, stock collapsed without me, but I was on the right track. If you have learned something today, please share your key takeaways with me in the comments. I always look forward to reading your feedback. The reverse split setup is my bread and butter strategy. I would love to make more in-depth tutorials, share my insights with you, so please let me know if you enjoy learning from my style of trading and my thought process. Before you go, please watch this video over here. You will learn about the most important lessons that I have learned over 8 years of trading all in one video.